Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Today, guys, we will take a look at the Canadian dollar because on the gold market, actually, the intraday picture mostly the same as on the euro. So I have put the 4-hour time frame chart in the beginning of this, our weekly research today, just to show you that mostly we will be watching for the same pattern as on the euro. So on the euro, yesterday we have talked about it, so we will be watching for a godly triple buy on the ABCD retracement completion point. As on the gold market, it will be mostly the same pattern, although on the gold market it should be a bit deeper compared to the previous lows around 1302 area. That's why I thought that maybe not really necessary to prepare the separate isolated report on the gold market right now. Meantime, the Canadian dollar is coming to our destination point, and it's probably on the next week already. We should be very careful to any signs of weakness around this area. So I have put today in the weekly research a minor, small, just a few words and fundamental background to the current situation. So there are some not really clear situation around free trade with the United States, although the Canadian has got some preferences, and it was expelled from the impact of the tariffs by far, but still it's not really final clarity in this question. Second, the recent statistics in the Canadian dollar in Canada is also not really very superb, and the same situation with the rate increasing. So currently it's taking into consideration the last comments of the governor of the Bank of Canada. So it seems that it really not some intention exists to increase the rate. So that has put the Canadian dollar lower, and correspondingly the chart is moving higher due to these events. But market gradually is coming to a very strong resistance area. So weekly and monthly analysis tells that the target stands around 130-130, but on the daily chart we have ABCD that points on the target with the more precision, so XOP target, and it stands at 31.58. So 131.60 is the area where market should start feel the pressure, and where some foundation for reversal really could be put by the Canadian dollar. This also probably will be the daily overbought, but at the same time, guys, we call you to be extra careful and do not take any position blindly just because market has reached very strong resistance. Because market indeed could fluctuate around this area for some time. It doesn't necessarily that the downward reversal will start immediately. Besides, we're talking about the monthly and weekly confidence resistance, and there is a really wide area where market could move 100 pips high, 100 pips lower. So for weekly chart, it's nothing, but for us, when we're trying to take this, placing the stops for 25, 30, maybe 50 pips, it really will be very significant. Second reason, because take a look at the upward strength of the market, how it's really strong pace of the upward action. So you can see the thrusting action, tail closing on the whole road to the upside. And the market very often overextending on the major targets. So take a look at the COP target was slightly existing here, minor retracement after the COP, reaching an OP significant breakout. So as you can see, it was more than the 100 pips higher action, while OP has been reached here. Retracement after OP is also very small. It's not even major 3.8 retracement, just minor 3.8 of the most recent reaction point. Now it's going to the XOP. On the way to the XOP is also very fast action, and take a look, tail closing mostly. So I would suggest that the reversal will not be easy, and it could be really volatile. That's why our major part, it's very important part of our trading plan, is to wait for the clear bearish reversal pattern on the Canadian dollar before taking the short position. On the 4-hour time frame chart, guys, we do not have a lot of tools for forecasting where it could happen. And one of the tools that we have is the upside channel, and definitely it should be broken when the real reversal will happen, because if reversal really will take place, market should form here some bearish reversal swing. But from what point it will happen, it's very difficult to forecast, because here we have the final ABCD pattern. I think that it has a really minor meaning, because we have two major ABCDs as on the monthly, on the weekly chart. It's points OP targets 131.30, and we have the XOP on the daily that points on 131.60. It's two major ABCDs that we have. This is minor ABCD. I'm not sure that definitely will be completed. It points on 31.90. But here we have another important tool, is the extension of this most recent retracement. Why it is important? Because first of all, it stands precisely at 31.30. As you can see, it's 1618. But 1618 ratio is very typical. It's typical ratio for a hand and shoulders. That's why it will be interesting to watch for what will happen here. So if market will stack somewhere between the 31.30, 31.60, and starting move down, the one of the possible patterns that we could get here, it could become the hand shoulders pattern. Left shoulder, hand, right shoulder. So that's the first pattern that we'll be watching for. As you can see, as market still stands on the way to the targets, no other clues have been formed yet, so we just need to keep an eye on what will happen. But it's really very big chances that on the coming week, big changes could happen, targets should be reached, and as we will get a lot of important data, multiple central bank meetings, other statistics, so it really could give the new breath to the markets. So that being said, as Loonie dollar is coming to the final destination point, we're starting to monitor for signs of weakness here and waiting for a clear bearish reversal pattern on intraday charts. As this setup is forming on through the all time frame, starting from the monthly down to the intraday, I suggest that this pattern probably should be extended. It will not be some just engulfing candlestick pattern. It will be rather extended, kind of the butterfly, hand shoulders, or something of that sort, I suppose.